Welcome to the SDA Housing Podcast, brought to you by NDIS Property Australia. Before starting this episode, we need to provide a general disclaimer. Information contained in this podcast is general in nature only. It does not take into account the objectives, financial situation, or needs of any particular person. You need to consider your financial situation and needs before making any decisions based on the information in this podcast. And you should consider seeking independent and professional advice for your personal circumstances. All right, let's begin.
Hello everybody, my name is Minh and I'm your host for today from NDIS Property Australia here in Brisbane, and you're listening to the SDA Housing Podcast, a show that explains, highlights and guides and brings awareness about all things SDA in this ever-changing NDIS world. Today's topic is insurance for NDIS SDA investment properties, and today our guest speaker is Jeremy and Julie. From Insurance Advisernet. Guys, where
we're actually based up on the Upper Hunter Valley and mid-north coast of New South Wales. I started this business with my wife, Nikki, back in 2011, and we've now got offices through Dungog, Port Stephens, and up through Armidale and here in Taree. So we cover a pretty big area from the Hunter right up to around Coffs Harbour and inland.
Wow, great work, guys. I remember Taree. I did some paragliding training.
Oh, right.
Yeah.
Actually, a client of ours, he's involved with a lot of that around this area. And yeah, sometimes when you're down by the river, you see some paragliding and some parachutists doing what they do. It's a beautiful part of the world.
Yeah, nice. So thanks for coming on our channel, our podcast. Tell us more about your company. Actually, what do you guys do as insurance?
So up front, I'll let you say that I call us insurance advisors, and Julie can jump in any time here as well. Insurance brokers is a very old term, whereas I look at what we do in the insurance world more as advising. So I look at us as educating clients on what the risks are within their business, within their livelihoods. Then we try and advise them on how to mitigate part of that. The role of insurance comes into it. So it could be that a lot of what we do is just helping clients know where to place fire equipment to break it down to a lower level, or things like that. And then how do we make an insurance policy work for you? So it might be you have a budget in mind for insurance, but if you can't reach that if you don't do certain steps first. So we advise on how to do that, and then how to protect your business in the best way possible.
So I take it you are familiar with the NDIS field and the inquiries that are coming in all the time for property investors who would need to have insurance on their NDIS property?
I surely am. This area of insurance came to me through a friend who is an accountant, was having some issues for one of their clients in getting the right insurance. And what I'd been seeing, I did a lot of research, and I saw that a lot of people had the wrong insurance in place. Now, although these houses look like houses, they're actually businesses. So they don't actually fall under a standard domestic insurance policy, because domestic insurance doesn't cover business. And a lot of property owners have just gone out, bought a domestic policy online, not realising that they're basically throwing their money away, because there is a bit in the insurance policy that's called the duty of disclosure. Now, what that basically says is if you don't tell the insurance company absolutely everything about that place, they have the right to turn around and say you're not covered. So that was something that I'm been trying to educate everyone in regards to this, because this is a community of people that need to be well protected. The participants that are in these homes need to make sure that their homes are safe, and that if they get damaged, they get rebuilt, so they can continue living within the community. So I'm very passionate about, helping that group of people, like friends and family that I have in homes like this as well. So, that's where my passion comes from. So I have a bit of an understanding. Yeah.
Oh, that's great. Good work.
Thank you.
Congratulations. Thanks, how many insurers does your team work with?
There's actually really only a very small number of insurance companies that will work in this space. As soon as you say the letters NDIS, the major insurance companies tend to run away.
Correct.
They're terrified in regards to the liability of these premises because of the fact that, there's a lot of medical situations that need to be taken into consideration. I've actually approached insurance companies from not only here in Australia, but overseas, Lloyd's of London. I've spoken to so many different underwriters, about 30 or 40 of them, to make sure the cover that I've got for them is the right cover. I have a couple of insurance companies that really do understand what this is and have given us great support in making sure that the right policy is in place for our clients.
So just to bring back the technical terms of your insurance world to the layman, underwriter, reinsurer, overseas. So when you say Lloyd's of London, are they a reinsurer or are they the ones who underwrite?
They'd be the underwriter. So Lloyd's of London are basically the largest insurer in the world, and a lot of the insurance policies that you get through underwriting agencies are underwritten by Lloyd's. So, to break it down to a real layman's level is you look at Lloyd's and you think of Costco. So Costco or Big W has got a big warehouse floor and a whole lot of different pods in it. Within those pods are all these different what we call syndicates, and these syndicates have individual underwriters. So if we pitch a program, we'll pitch that to an agency who'll take that to Lloyd's virtually nowadays and electronically, and they'll go around that floor to various syndicates saying, hey, can you underwrite this? Can you underwrite this? Until we get a result that we're looking for. So that's how they work. We also have in Australia many insurers that are Australian domiciled. So they're basically authorised to write insurance in Australia. And the preference for us is to underwrite through them because we know that they've got the standings through APRA, which is the Australian Prudential Regulatory Authority. And they've got the right protections behind them. Because they've got to have a certain level of solvency, and we can trust them. We've also got good relationships with them over the years. Through Insurance Advisernet, we've built up many years of good working relationships. So if something does go wrong, because no insurance company is perfect, we've got some good support to get results.
Wonderful. So are these insurers that you work with who are domiciled here, are they household names or are they more different? People know they are. I'm not asking for the names.
Yes, they are household names. They're extremely well known. Names that you can trust. We only ever deal with the best quality insurance companies. We don't go to, the dodgy brothers. We only deal with the best. So yes, the client will definitely recognise the name when they see the insurance policy.
And that we hope gives the clients a level of comfort. That's what we're looking for, is that comfort. As I just said, it provides us with comfort to know we can trust that company, but it's also an insurance company which, Joe Public will understand and know as well.
Cool. So let's pull this back to normal general insurance discussion so that our listeners can understand. In the insurance world, there's home and contents, there's landlord's insurance, there could be public liability. What kind of policies do you reckon will be applicable to our investors who are investing in these NDIS?
Okay, so we look at the NDIS home and we see it as a house. So that's why a lot of people get domestic insurance. Domestic and landlord insurance policies exclude businesses. So if you have this house as a business, so if you're renting it to an NDIS provider who runs the home and organises the participants and the maintenance, then you must go under a business policy. You can't have it under a domestic policy because it's no longer mum and dad and the kids in the house. It's no longer 3 college friends renting a house together. It's now a business. So although it looks like a house, it's a business. So that's where you need to make sure if you're renting it, if you have a head lease to an NDIS provider, then that's a business.
So are there many people out there, you think, who are unaware of this and have a supposed insurance policy for their NDIS house, assuming they're fully covered, but don't realise that they're not?
Yeah, this is a huge issue.
And why are they even in these policies? Shouldn't the advisor or the insurer be saying you are... I'm asking questions.
So basically the situation is a lot of these property owners are just getting online to an online platform and saying, I've got tenants living in a house. So they just get a landlord policy because they see it as a house. It's the way we perceive it as to the information we give. So the client, the owner of the house, could actually think that they've got the right insurance because it's a house to them, right? But in the insurance world, if you don't talk to an insurance advisor like Jeremy and myself and our team here in our office, if you just go and do it on the platform, you're leaving yourself exposed. You need to speak to an insurance advisor who can take a look at it and go to the insurance company and say to them, this is a house being rented to a business for NDIS purposes. It needs to be insured that way because there is a different risk to to renting a house to a business than there is renting a house to a family. It's a completely different thing because we have medical needs in the SDA houses. And so these are things that need to be brought to the attention of the insurance company. Now, if you own a house and you just jump online and put a policy through, the computer system that you're on, the platform, it won't recognize that you're doing a SDA house. It will just give you a standard landlord policy and expect you to read through the exclusions and understand that we do not cover a premises if it's used for business.
So this is one of the traps as well, is if you're going online and getting an insurance quote yourself or you're ringing up 13, insure, whatever it is, you're only going to have a certain set of questions. And if you don't understand what these properties actually are, 9 times out of 10, you're going to get it wrong. Yeah. When we did our first mail out a few weeks ago, the amount of responses we got from people who thought they were covered, and we had other insurance advisors contact us going, what do you mean my client isn't covered? And when we explained to them, they were like, oh, you're right. So one of the things in disclosure is you need to disclose how many unrelated people are living in the home. Now, in an SDA house, the NDIS provider could have 4 or 5 unrelated people in there. If you answer a certain way on on an online quote for just a domestic home and contents policy, you've instantly voided your duty of disclosure. So this way, it protects the SDA investors and also protects the NDIS provider within there as well.
One of my questions I have that I've had with many other customers in the past is they've asked me the following question, and I'll ask you this question. Is it possible for my policy to be cancelled after multiple claims on my policy?
That's a really good question. And I'd love to be able to give you a straight answer, but the answer is it depends. It depends on the claims. So if you were to claim for, say, you had 1 year a storm and a tree fell on your house, and then the next year you had a fire in the kitchen, and then the year after that someone accidentally broke a window, they're all standard kinds of claims, and your premium would be affected and your excess may be affected, and there may be some endorsements put on the policy in regards to those. But if you're lodging claims that the insurance company looks at and says, well, hang on a sec, what are you doing to mitigate these losses? How are you minimizing the chance of this happening again? And if you claim the same thing over and over and over again, then the insurance company's going to look at it and say, well, look, we just don't think you're doing enough on your side in minimizing the risk. So, and that's why we have constant conversations between us, the client, and the insurance company. That's why we're advisors. We're not just brokers. We're not just here to buy you a policy, because that's what brokers do. They buy you a policy and that's it. Right. Advisors will sit there with you and say, right, what are you doing? Can we try this? Can we try that? How about we put in some bollards here? How about can we do this? How do we minimize? I know a lot of my SDA house owners, what they're actually doing now is actually taking maybe 5 to 10% of their earnings from the house, setting that money aside for repairs that occur, that, things happen. Sometimes there's a hole in the wall, there's this or that. That way they're only using the insurance for the really big claims, for when the tree lands on the house, or if a car goes through the garage, or, if there is a fire or something like that. So minimize the number of times you use the insurance policy and maximize their ability to use your maintenance program. And we're here to help them.
Yeah, we suggest the same thing. We always tell our clients to assume a 3 to 5 grand ongoing annual costs of repairs, maintenance, and minor damages. And don't claim too much on your policy because it comes down to excess, obviously, and claims history. And just be mindful.
And that's exactly the way
Have you come across?
Yeah, sorry, mate. Yeah, it's exactly the way to go. So I always tell my clients, and have forever, that look at your insurance policy. And I guess I'm a mad sports fan, so I look at your insurance policy as the goalkeeper in a game of football, for example. So you've got to do all that mitigation first before you get to the goalkeeper. So get all that done and then save the insurance policy for the stuff when it really, really matters. If you've just broken a window, let's put that down to wear and tear. Not saying you can't claim, but let's put that down to some wear and tear. A little bit of a hole in the plaster, let's put that down to wear and tear and save it up for when you really need it.
Any shocking stories or claims you've received so far with NDIS?
Actually, no.
In this space, I don't think so.
No, nothing actually, nothing shocking. Look, there are bad things that do happen, but I guess we've done our research in the industry and in the way that these homes are being used. We understand that there's going to be damages. We understand that there are going to be situations in these homes that perhaps average Joe doesn't come across. But, so nothing shocking, nothing that an insurance company would say no to, as far as I've seen. We're very lucky with the relationship we have with our main provider of insurance. They're very, very good and they're eager to help the community. And they have a really good understanding. What's really important for us is we made sure that they understood that we didn't care what kind of build this was. It didn't matter if it was robust or not. It was about the value of the home. You tell us how much it would cost you to rebuild that home, and that's what we cover it for. We're not going to label these houses. No one gets treated any differently. All of our clients are the same. They're all respected highly, and we're here to help them and make sure they've got the right cover in place. So
the thing that you need to keep in mind as well is the insurance policy will respond to what your lease agreement has.
Yeah.
So if the NDIS provider has got a lease agreement, this is something SDA investors have got to know. They've got to make sure that lease agreement is written in a certain way, because there might be an assumption that every single thing on the earth is covered, but there's certain elements that are going to be, or certain risks, should we say, that will then go back onto the NDIS provider, being the operator of that house. And that's under a contractual arrangement. So whilst something may happen at the house, the first point of call is the NDIS provider to make sure they sort that out. So making sure you check your leases and your contracts, because that works hand in glove with what an insurance policy is intended to do.
Absolutely. That's probably one of the most important points.
Thanks, Julie.
Good. Is there any way to decrease the cost of a policy or premium if an investor does positive variations to the house to make it more safer and more friendly to the running of the operation or the business here, like fire sprinklers, fire blankets, coverings on the walls to prevent damages by wheelchairs? Are those things considered at all by the insurer?
Yeah, they are. And that's the thing. So, and like with all things with insurance, the more mitigation you do before you take out a policy, the more that drives that rate down. Yeah. All right. So sprinklered buildings, for example, are always going to attract a, let's say, discount on the premium compared to just a standard building. So any form of mitigation you can do beforehand. And when you're talking to your builders about what you're doing here, and it comes down to a business decision on an economical level as well. So you might cost you X amount of thousands to do it once, but then you're going to save for the next 10, 15 years of insurance policies, you're going to save that back. So you can make a business decision that way. But by all means, you might want to add on to that in some way.
Yeah, well, it's absolutely true. So basically the fire sprinklers are a big deal. If they're using sprinklers, and I know that the sprinklers are now becoming compulsory in some states, so which is great. But that will definitely give you a discount on your premiums. Some people like to increase their excess. That is a way you can reduce your premium, but it'll only be a very slight discount. It won't really give it the same value. So if you go up an extra $1,000, it won't save you $1,000. A lot of people think that it will, but it won't. And that's why we're here as advisors. We'll actually go through all these things with you and say, well, if we change this or change that, we can do different things. And that's the other reason why what we can do with the business policy is you don't have to cover everything. You can decide, do you want theft cover? Have you put any contents in there? If you haven't, well, then you don't need some of these areas that other policies make you take out. So, we're there to help, and we can help with the premium in that way, but making sure the right coverage is in place.
So when you talk about the right coverage, do you mean damage and home contents?
So the right coverage for me, when I'm talking about SDAs, because we have to remember this is a business, we want to cover the building. So when I talk about building, I talk about you pick the building up, you turn it upside down and you shake. Anything that falls is a contents item. Anything that doesn't fall, that's part of the building. We want to make sure everything that hasn't fallen is covered by this policy. So if it cost you $500,000 to build this house, then we want to insure the building for $500,000. So that means there's $500,000 there for you to rebuild the house if there's a fire or a storm or anything like that. We want to make sure you have the right public liability. As a property owner, you have liability there as well. So we don't go below the $20 million. $20 million public liability is a necessity for a property owner, because of the fact that, I don't know if you've had any dealings with solicitors these days, but to get a solicitor to read an email costs you $35. I'm not saying do anything with it. I'm just saying read it. So, a liability claim can end up costing a huge sum of money. So $20 million is without a doubt the minimum. Then we have some property owners that want to cover that rental income. So because they've still got a mortgage on the house. So we need to make sure that if it takes 12 months to rebuild the house, that income is covered for them, so that they've got that money to pay their mortgage, so that the home can be rebuilt and we can get participants back in there and back living in the community. So this is what we mean about the right cover. Understanding the buildings and what they're there for, that's something we know. It's something that we're passionate about. The whole team is.
And I think as well, just to finish on that, when Julia says, turn your house upside down, tip it out, that's your contents. Sometimes some of those contents are yours as well. So I don't know how many of our SDA investors would read the definitions of what a building is and what a content is in an insurance policy. We geeky people do that. That's what we do for a living. And a lot of those items wouldn't be covered by a building. So you might have $500,000 to rebuild your house, but, I've put in carpets, I've put in curtains, I was talking to a lady last week in Queensland, and she's putting in a dishwasher and a whole laundry fit out.
Lovely.
So you're like, well, hang on, how much is that costing? $15,000. Righto. That's not building. That's content. So that's where we get to the real nitty gritty of what these individual investors need and tailor that product to them.
That's fantastic, guys. Robust HBS. Thoughts?
It doesn't matter to us. It doesn't matter at all. To us, it's a building, it's the design, it's what's there already. It doesn't bother us which way, what it's used for, how it's built. It's all about the value of the rebuild. There's no difference.
And the insurance company we're talking to in the primary, they're aware of both sides. We've made them aware and they're comfortable with either one.
Yeah.
Good. The question that everyone's asking, and I can't answer the question, is what is the range in price for 4 years cover?
I'll give you some examples because it's general and everyone's different. But pick a couple of examples without names on a certain sum insurance.
Look, okay, so depending, it all depends on the location, okay, as well. So say you have a house that's a 4-bedroom house, 2 or 3 bathrooms with a double garage, brick veneer, built last year, no sprinklers, with all the right fire protection in there. Say it's insured for $400,000, and say we've got a rental income there of about $60,000. You're probably looking somewhere in the range of, again, depending on the location, from about $2,500 to $3,000.
Yep.
And that includes your public liability. That's everything.
So that's a general idea because each one is different. So if we're doing interstates, for example, New South Wales has got an emergency services levy.
Yeah.
Whatever we can do to promote removing that levy, we will do to the nth degree. It's an absolute disgrace. But it's there. So in New South Wales, it might cost more because there's a third layer of tax. So that's where there's variations. But we're seeing most of these houses, like Julie was saying, generally fall around that 2,500 to 3,000.
Now, the challenge is when a person settles their brand new house and they don't have tenants yet and they applied for insurance cover, it may be a 4-bed, 4-bath, 2-car, extra large wheelchair house, HPS house, or fully accessible house. And the potential income, potential is the key word here, being 120, 130, 140 grand a year income. But there's no tenants on lease yet. So how do you base the quote of the insurance premium when there's no head lease or no? Is there there's a maximum rental possibility? There's an actual rental scenario. So do you base the quote of the premium of insurance here for this house based upon maximum or the potential or actual?
So basically, insurance is a fluid thing. It changes with your needs.
Yes.
Okay. It's there to keep you going and to cover you as you grow with the place. So as soon as the house is finished, we insure the building and whatever contents you may put in there and property owner liability. Then you get a tenant in and you start having an income, say, of 60,000. So then you let us know and we endorse the policy and we say you now have $60,000 worth of income. If then you get another tenant in and, 6 months after that and you get another $60,000 worth of income, you let us know and we add that on top. So as your needs change, we can change the policy. And that's the beauty of having an insurance advisor like us. We can change it to suit your needs.
Yep.
So most of my clients are looking at the 4-bed, 4-bath houses around Australia with a build price of around $550,000 to $650,000 build price. So if you're saying your example was $400K build price on 60K rental at 2.5, that means that the 550 plus would be looking at about 3.5.
It's really hard to say. Yeah. Again, it depends on the location. Yeah. There's also a minimum premium that has to be covered. The insurance company has a minimum requirement. So we reach to a certain level and then after that, it increases and changes depending on the construction, the security, the fire protection, the location, all those things come into it. So yes, you can have a house that's, could be insured for $5,000-6,000 if they're, a very high level, $600,000 build with $200,000 income, that's getting up there. But I mean, at the same time, your income is getting up there as well, and the amount of time it would take to rebuild would also come into this as well. So
there's also the scenario where in insurance land, it's not just, they don't just rate risk on postcode, they rate it down to the lot number you're at. So say, for example, your house you're building is in what is deemed a bushfire zone, it will get loaded higher than someone whose house is in the middle of Brisbane or the middle of Sydney. Same again, if we're using those examples, if someone's down by the river at Brisbane or the Yarra River, Melbourne, wherever, or we are in Taree down by the Manning River, they're going to have a higher flood rating, or sometimes you can't even get flood. So that's why it's really hard to give an actual on what it is until we know the individual scenario. And some of those houses that are $500,000 or $600,000, they might fall into that $2,500 to $3,000 premium bracket because the area they're in is deemed by the insurers to be low risk. So it really is an individual case-by-case scenario.
And dare I ask what the excess range or average will look at?
Yeah.
$500. So the same as the household policy, about $500. And if you want, we can go to $1,000, but I usually keep it around $5 because it doesn't really help the client that much financially. Yeah.
If you're going to go, if you want to save money and you go $5,000 or $10,000 excess, sure, you'll save some premium then, but you've got to figure out where do I draw the line on what I'm prepared to, control myself in any claims. And many people don't really want to do around that $10,000 mark.
Yeah.
Any final words of advice?
Final words of advice. Oh, I think we've covered most of it, haven't we? But I mean, I guess the key thing from us is if you are going to organise insurance for your SDA home, probably don't go online.
Yeah.
That's probably one of the key things. And most of the people we've spoken to already have said, oh, yeah, I rang this lot or I went online and I couldn't find any cover. These kind of properties cannot be bought in the direct standard market, so to speak. We've been able to talk to some insurers to get some opportunities to underwrite it properly, an insurer who understands it. We're helping the SDA investors mitigate a lot of that as well with advice along the way. And, yeah, basically trying to tailor it to their needs. I'll throw to you on other thoughts. You must have more than me, surely. Come on, you must have.
Look, I have to say it's really important when you're doing something like this, investing in a property like this, it's not your cookie-cutter property.
Correct.
You need an advisor. If you were buying a hairdresser down the street, sure, go, I can understand you can pop that in. Everyone knows what a hairdresser is. Everyone knows how that business works. The majority of people in Australia, I'm sad to say, do not understand what an SDA is. They have no understanding. You say the letters NDIS and they go running. They don't want to know because they're scared in the insurance world. You have a team here who are dedicated to help everyone in this area. We want to make sure the homes are insured properly so that if anything does happen and you need to use the policy, that we're here for you. It's important to have an advisor in these sorts of houses as well because we help you through the claim. If you do need a claim, you're not stuck on a phone waiting for someone to answer it, 45 minutes and you're still stuck. Do I press 1 or 2? Or if I put my phone down and, make lunch, what do I do now? All you do is you pick up your phone, you talk to Jeremy, you talk to me, we lodge your claim, we run it through for you, and you don't have any worries. And you know that we've got it covered right for you.
So if you're going to invest, in an SDA property, I think you've taken a very positive step to help the community, and you also see some, maybe some potential earnings there. Why would you then be frivolous on protecting it? You really need to have people who understand it, people who have got your interests at heart to look after it, and that's what we're trying to do.
And I assume these insurers you work with would have a quick turnaround time?
Yes, absolutely. Yeah, we work. They're fully on board on what we wanted to do. When I presented this to our key insurer that we use, when I explained to them exactly, why we need to do this, they're 100% on board. They completely understand. They've got the full grasp of the situation and understand that turning around these claims are very, very important. We need to get our participants back in their homes. We need to have them feeling confident and safe that they're in their home as quickly as possible.
I want to give you a little funny story of another provider that spoke to me about this little incident. They had a robust house with participants, and these participants wanted to learn how to cook, right? So the carer turned on the stove, teach them how to cook, and obviously their first time in the kitchen, and things are burning, smoke's going everywhere, and the fire sprinkler goes off, and it just floods the house. Right, so now the provider has to move the participants out of the house for 4 weeks, right, while they repair the water damage of the whole house because of this attempted cooking exercises. Now, in that scenario, who is to blame for that damage? Could the landlord say, well, "I'm not paying that premium, the excess for that, because it was your staff, Mr. Provider, who didn't look after the ventilation properly and caused all these damages and blah, blah, blah"? Or will the provider say, "Hang on, Mr. Landlord, this is your house, it's damages to your business premises, you're paying for the cost here"? In this scenario, I laughed. It was a funny story. I laughed about it, but in all seriousness, it's an insurance claim. Who is going to be claiming it? Who can be paying for that damage there?
Do you want me to tackle that one?
Do you want? I'm happy to do it if you want to do it.
It's interesting. And again, I'm going to start by saying, what does the lease say? That's the key thing to think about. So one way or another, this claim is going to get paid. Let's put it that way. Point 2 there, though, after point 1, is who's responsible under the lease. So make sure your leases are really drawn up so well that the actual NDIS provider or the responsible tenant is taking responsibility for that site. So if the lease is done correctly, then the claim should be on the NDIS provider to actually tackle that. Now, if it's not, that claim under this policy would be covered, all right, under our policy, every day of the week. What you might find, though, is the insurer for our client, the SDA housing owner, might then turn around and seek recovery of costs off the NDIS provider because really they were held responsible. So it comes down to a liability issue on their behalf. So, point one, check the lease. Who's responsible there? Point two, one way or another, this one's going to be covered. There's no concerns there.
But the cost would only be $500 though, right?
Correct. So, and that's it. So let's say you've got a legal scenario, and I've had this on other things. So I remember once there was a client who was being chased, not NDIS or SDA industry. They were being chased over a ridiculous scenario by an ambulance chasing solicitor. So we just got the insurer involved trying to defend against property damage. So it turned out that they got over $30,000 worth of legal fees covered for a $500 excess just to defend them. So you don't need to be at fault. That's what can go on. And a lot of people don't realise that about public liability is you've got legal behind you that could only be $500. Why wouldn't you use it?
That's right. So basically the lease is really important. You need to make sure that it's really clear as to, who's responsible. If you've got an NDIS provider managing the home and running the home, they should have policies and procedures in place in regards to how to do these activities, in regards to how to run a teaching class. If we're going to do a teaching class, what level of experience do our residents have? And do we make it a no heating cooking class, such as a cheesecake or something like that? Or do we do the chips? And oh my goodness, we all know what happens when you do the chips. We've seen that out 1,000 times. The NDIS provider should have the right expertise and knowledge in regards to doing the lessons, and it should be in the lease. But if it's not, the property owner doesn't need to worry. They will be covered. Correct. And then once it's all done and dusted and the home is rebuilt and everything's done, leave it to the insurance company. The insurance company will go and talk to the NDIS provider and say, okay, well, we think there's something there. So completely exactly what Jeremy said. So, but the property owner does not need to worry. They will have their home rebuilt without a problem.
Good. Well, thank you so much for your time.
Pleasure. Absolutely enjoyed it. And I really think that we've provided some information there.
How can our listeners get in contact with you guys? As a 1-300 number, a website?
The website's being rebuilt. All right, watch this space. It's days away, but you can go to iaamidnorthcoast.com.au, or you can.
Is that the new? Is that
it is. Yeah, existing or it doesn't matter. It's the same address, so you'll find our contact details on there. Office number here. It's 02 New South Wales 02 6551 8712. 6551-8712. But yeah, if you go to the webpage, you can find out our contact details, email us, and we can start the process here. It's not just Julia or I, by the way. As I mentioned at the start, we've got 3 offices, and everyone in our office is aware of what's going on with this program. So we've got a team of 7 of us, and we can all just jump in, grab what we need to do, and get the ball rolling from there.
Well, we'll put all your details into our podcast summary description below when this is published next week. And then people can see exactly your office details and your contact details.
Fantastic.
Yep. Thank you so much for your time. We really appreciate your efforts here. And this is a long time coming for us to get someone who's an expert in SDA insurance.
Yeah, I appreciate it. All the best. Thank you.
We hope you enjoyed this episode. Please make sure you are subscribed and following us so you can keep in the loop with all of our upcoming episodes. We would really appreciate it if you could leave us a 5-star rating, a written review, and to share this podcast with those that could benefit. Until next time, catch you on the next episode.